Many remote professionals talk about moving to tax-free countries, but most of the advice online is superficial. A true strategy is not just about paying zero income tax. It is about securing a legally stable residency framework, understanding the statutory tax rules, and avoiding future disputes with tax authorities in other countries. In this analysis, we look at 5 jurisdictions where remote workers can combine zero personal income tax with credible residency pathways. The focus is not tourism visas or short-term digital nomad permits. Instead, we examine countries where the legal framework allows professionals to build long-term residency while maintaining tax efficiency and regulatory compliance. The first jurisdiction is the United Arab Emirates. The UAE remains one of the most structured zero-tax environments for professionals. Individuals do not pay personal income tax, and the country has developed a variety of residency options designed for entrepreneurs, remote workers, and investors. Remote professionals can obtain residence through freelance permits, remote work visas, or company formation in a free zone. The legal strength of the system lies in its clarity. Residency permits are usually issued for 2 to 10 years, depending on the category, and the country maintains a large network of double taxation treaties. The main requirement for maintaining tax residency is demonstrating genuine presence and economic activity within the country. For many remote founders and consultants, the UAE provides one of the most stable zero-tax structures available today. The second jurisdiction worth examining is Monaco. While often associated with ultra-high net worth individuals, Monaco offers one of the most established zero-income tax regimes in the world. Residents generally do not pay personal income tax under Monaco's long-standing fiscal framework. However, obtaining residency requires demonstrating substantial financial resources and securing accommodation in the principality. The process is heavily regulated but extremely stable once residency is granted. Monaco's legal environment also benefits from its proximity to European financial centers while maintaining a distinct tax system. For remote professionals with sufficient financial capacity, Monaco offers a rare combination of European lifestyle and zero-income tax. The third jurisdiction is the Bahamas. The Bahamas operates a tax system with no personal income tax, capital gains tax, or inheritance tax. In recent years, the government introduced residency options that can be attractive for remote professionals and entrepreneurs. The country offers long-term residence through investment routes as well as extended stay programs for professionals who work remotely. The legal advantage here lies in the country's established tax neutrality and its clear residency legislation. However, individuals seeking tax optimization must ensure that they truly shift their tax residency, because maintaining strong ties to a high-tax country could still trigger taxation there. The fourth jurisdiction is Bermuda. Bermuda has historically maintained a zero-income tax environment supported by a highly developed financial services sector. Remote workers can apply for special residency permissions designed for individuals who work for companies located outside the island. These programs were initially introduced during the global shift toward remote work and have since evolved into a broader policy framework, attracting international professionals. Bermuda's legal system is particularly attractive for professionals seeking stability because it follows common law principles and maintains strong regulatory institutions. The fifth jurisdiction is Cayman Islands. Like Bermuda and the Bahamas, the Cayman Islands operate without personal income tax. The territory has long been a hub for international finance, and its residency system offers multiple pathways including long-term residence certificates and investment-based residency programs. Remote professionals who generate income outside the islands can benefit from the jurisdiction's tax neutrality while maintaining legal residence. However, as with other offshore jurisdictions, maintaining proper substance and complying with international reporting standards is critical. Despite the attractiveness of these zero-tax jurisdictions, remote professionals must approach tax planning with caution. Simply moving to a tax-free country does not automatically eliminate tax obligations elsewhere. Many high-tax jurisdictions apply center of life or substantial presence tests to determine whether an individual remains tax resident. If those criteria are met, the individual may still be taxed even while living abroad. For that reason, effective tax migration requires a comprehensive legal strategy. This includes understanding residency legislation in the destination country, ensuring compliance with tax residency exit rules in the original country, and structuring income streams in a way that aligns with international tax law. Another important factor is long-term stability. Some digital nomad visas are valid for only 1 year and may not lead to permanent residency. For professionals building global businesses or long-term careers, it is essential to prioritize jurisdictions with predictable legal frameworks and renewable residency permits. Ultimately, the most successful tax strategies are built on legal clarity rather than aggressive avoidance. Countries such as the UAE, Monaco, the Bahamas, Bermuda, and the Cayman Islands have developed fiscal systems designed to attract international professionals while maintaining transparent legal structures. For remote workers and digital entrepreneurs, the real objective should not be chasing the lowest tax rate. The goal should be securing a stable jurisdiction where taxation, residency rights, and regulatory compliance align with long-term professional goals. Follow for more.